All right, Devils, how you doing out there? Here we are. Oh, it's Tuesday the 19th. Had a request to look at some FX pairs. So I came into this without a position here that would be relevant here, but I approached it as though I had nothing on and was just wanted to go shopping for an FX trade. So of course, when you're thinking FX, you absolutely have to look at the economic calendar to see what could be coming out in the near term that might affect. It's all central bank policies that moves the market. So you would certainly want to be aware of any upcoming financial reports that could be market moving. So of course you can do it. You can do it right here in TradingView, but most kind of default people know well is the Forex Factory calendar. A lot of this gets pulled from a lot of different sources here. It's very, very well known. You can just go to Forex Factory and go to the calendar, and most FX traders are aware of this. And so I'm looking here. So here we are on the 19th. I'm looking like, whoa, I got a whole lot of activity that's high impact. All of this data is coming out, and this is very focused on, well, I've got not only Europe, but I've got the yen as well. So right at the moment, as I'm recording this, Fed Chair Powell is testifying, so the U.S. markets are flat, going nowhere. But I got the Aussie, I got the Euro, I got the Yen, I got the Pound, I got all sorts of action coming here. So right off the bat, I'm a little like, whoa, do I want to put something on here with all of this significant market-moving potential data coming out into the market? So I look here and I go, okay, well, who's not on the list here, right? That might be an easier way to approach this. So I look here, all of Europe, get the dollar. Well, of course, we're talking majors. Who's not on the list? Well, the New Zealand dollar is not on the list because if you go back a week, you can see that they got all of their key data last week on the 12th, right? For last Tuesday. Their monetary statement, and there's their Fed governors were speaking. So you've got all of that activity has already come and gone. Markets processed it. Now looking forward to next week, right? Because you would always want to look ahead. Well, I do have on Wednesday at 8 p.m. business confidence. Right? It's potentially market moving here, but that wouldn't keep me out of a trade. And particularly since we're looking at something that would be more on the shorter term. So relatively clear, in the near term for the next 7 days, we say it that way, right? So it's enough to look. That's the idea. It's enough to say, all right, well, let's go take a look at the New Zealand dollar. Now, what I've done over here, you guys are used to me looking at this 8-pair strength meter. Well, I've taken everything off except for the dollar and the New Zealand dollar here. So New Zealand dollar in this, what do we call that? A light blue color, and the U.S. dollars in green. So we can look here. Now, there's a couple of things that are worth noting here. So we know that 50 is kind of the key range here. So if we just look back historically, look how well that contains these two pairs, right? So we get up to the edges. Look at this, right? Within ticks, here's a little break here. Here's COVID crazy, right? So the U.S. dollar, right? Everybody wanted dollars, but look where we came from, straight up, right? So look where we were, New Zealand dollar up here. We go from 50 up here to 50 down here. So we see this is extremely well contained by these upper ranges here. But now if we just come in, now that's on a 12-hour. So looking at this, well, now if we look here, we look at the two of them. Well, what are they really doing? Well, you could make a pretty strong case here that we're just kind of range bound here. So so here's, if I bring that down a little bit, allowing for this little pop over here, and then bring this down here and get this little range here. So it's damn near, well, this one is damn near cutting it in half again. Now here's 0, so it's not quite, the dollar got a little bit lower here if we get that. But it's pretty, so 50 being the ranges that it doesn't seem to get beyond, but then this sideways action here. So really since, so the last time, here's where they last crossed. So this is end of March, and we've just been going sideways here. So it's just, we can't push to any of these upper and lower extremes, right? We're just going sideways. So that's enough to say, okay, well, I want to see how that's being reflected on the chart. So let's go grab the New Zealand dollar. Well, now here, I'm out on a daily chart because we got to get some perspective as to where we've been. So you would never want to be looking at an FX trade without first getting some context And right, no better place to get larger picture context than the daily chart here. So even if I scrunch this up here, well, yeah, okay. So I'm going back to 2009 here, right? U.S. market collapse. But I went straight up, and now I'm coming all the way back down. Now I haven't gotten back that far, and it looks to me like even if that's as much as I can scrunch here. I don't know that we need to go back that far, but we can see where the lower range is here. Of course, this is 11 years old, that low, but it's still in play. But I do see, I guess just looking at it here, of course, my eye just sees a 3. Right? And so as soon as I see a 3, well, the first thing I'm going to do is measure and say, well, was it technical? Let's get right on that. So was it technical? All right, this should surprise exactly 0 people, right? We go to 50, yeah, we tag it, we can't get golden zone. Right. This looks like a slight front run on the target. It never changes, guys. Never changes, right? It's whether we're looking at a daily chart or a 1-minute chart, doesn't matter. Always the same thing. So here we go. So here's our pivot. Now remember, a target being achieved is not a signal to take the opposite direction, but it has to be respected. So shit, I'm just staring you right in the face. We know upon reaching target here, we start to see some buy pressure coming into the market, right? So this algorithm, well, they likely started here. That's 16, right? 4 years to get there, right? So you think. That's why algorithms do this work, because we as human beings, very hard for us to stay in a position for 4 years, right? It's almost impossible. But no, we can still come back here, because the whole point is this algorithm leaves footprints, right? So there it is, right? Big, giant, big footprint right there. Okay, so coming off of that, well, now let's go look here and say, okay, well, what do I see now? Because we're trying to focus in on here. Well, this phenomenon here isn't accommodating for that giant measured move here. This is what I see is just sideways action. So let's go look at that on a smaller time frame. So let's go. Well, a couple of things here. I'm wicking off the critical low. So here was the pivot, right? That likely you'd want to pay attention to this extreme. And then just the same kind of thing here. This is the last swing low that it's likely to bump its head on as it's coming back up, right? Every pivot is potential support or resistance depending on where it falls. And just kind of wicking out some key levels here that might be relevant to where we're trading right now. So let's go to a 3-hour and pop this up a little bit, open it up. See what we can see here. All right, so let's open it up here. Now I do have a little bit of an Elliott count on here, because we have, the whole, really, there's not much of an Elliott count here. Not enough to where I would trade off of it until I get right here, right? So this 5 is clear, so it looks like maybe it's a 335, although it's hard to dig 3 out of that. But this looks like there's some sort of a little, at least you can put some Elliott structure to it. Whether you're going to dig out a 535, not much of a 3, but either way, so this goes far enough, so potentially you have a flat. But the finishing in the 5 is solid. Right? So we have that. So I wicked off this pivot here, because it does seem as though it was significant to the market. So if we look here, just this pivot here coming over, now it's yeah, they get through it here, but then it's tested again, holds. Now it's just been tested again, it pops up. So as you look here, if you just kind of wicking off these regions here, this is that prior level. Looks like so I'm going to pull this one off. But this is that prior structure here. So just kind of looking at the whole thing, you might do it this way and say, all right, well, I know I had some action up here. Note here the low volume node here, as we have no market acceptance. And then kind of looking down here, this has been awfully good here. This is the last little high volume node. So just kind of the same idea. Let's kind of get all that action in there. We've got this little high volume node here, but really, right, what are we saying here? Looking at this, you're like, okay, well, here's essentially one standard deviation, and we're a little skewed, but here's point of control. So here's where all this volume is taking place, and essentially we're just going sideways. Look at the Vegas wave, right? It's literally on top of itself. Right, when you see that, heads up, right? It just it's almost like a squeeze, right? We have a lack of volatility, but this price action is very consistent with this price action, right? I mean, this is not complicated. No need to complicate this. So essentially what we have here is we're range bound here. We're going up, down, up, down, up, down, right? We're just range bound. So when you find a market in that condition where it's trendless, that doesn't necessarily mean you can't trade it, right? Markets are not trending the majority of the time. So you've got all sorts of things screaming at you, hey, trendless market. Literally, the Vegas wave is on top of itself. We get this reflected here that we're range bound, and we just kind of looking at it and just wicking off the structure. So if you were going to approach this as a trade, this is just classic oscillating price action. So thus, an oscillator would make sense. Now I'm using, this is a stochastic of the MFI, right? So the money flow index is often used in, it's formulated very much like the RSI, except it incorporates volume. So many people prefer it because we always want to get some volume representation if we're analyzing the market. So the MFI with a stochastic applied to it is kind of ideal for this scenario. Now, the other thing that you could do here, because what you're really looking for is to play when we get up into the upper end of the range, you're looking for momentum to take it down. Now, this is something we haven't talked about before, but this is an ideal scenario to be using momentum bars, which are the Fibonacci bars, which are in a sense they're momentum bars because of the way the bar is formed, right? So with always starting at the midpoint of the bar. So to get a run of a consistent color, you need momentum to create that. So this is not a bad scenario here for that kind of trade setup. So now we're not tick to tick. We're not going right to the tick, although these are pretty damn good. So if I was looking at this trade, the one thing that you'll note here is that all of the measured moves, well, I mean, probably not all of them, but they're breaking, right? So if there's a sell side coming up here, you're not getting that price action. So it's going up to the range. So if you were looking here for the sell side, right, that breaks, right? So same thing coming down, right? So from the low to the high, oh, that's a very slight break, but it's a break nonetheless. If I get right on that, get right to it, right? I mean, it's, that's a break. So we're getting breaks. It's just chop, just sideways, right? Again, look at the Vegas wave. So if I'm looking for a fresh trade here, knowing, okay, I got nothing on the horizon that's potentially market moving. I've got the momentum from the Fibonacci bars clearly showing me we're heading up. I've stalled briefly at the Vegas wave, but I'm well through it now. So what am I trying to set up here? I'm trying to get this thing to push a little higher and then take the next range down. So that's what I'd be looking for. So you might be a little bit more, let's do it this way. I might grab some of these wicks, kind of pull them over here, as this is the last time we bumped into supply up here at the top end of the range. So, you got a little distance to where this is the structural end of the range. But if we're coming up here, so a stochastic, let's pop this up a little. A stochastic MFI seems like the appropriate kind of a trade tool to use here. So last time we were up here, so as we come down, right, so that's coming down here. So this can be an effective way to approach the market. It's not really related to any Elliott context because there's really nothing, there's no Elliott here to really work with, other than I can still use some Elliott to my benefit here. So I know corrections, right, are never threes. So, pardon me. This is because I've got a 3 here that finishes with a 5. So because I've got that completion of this potentially as whether it's a flat, I mean, it looks like we'd have to trade it as a flat. Because I can end the correction here with a 5. So you have to put these two together. So this has to be an A, B, a C, because corrections are never 5s, right? So because I've got the 5 attached to the 3, I can make a case here for a pivot. Now, I get deeply oversold here per the oscillation of the stochastic MFI, and as I rip up, I get all of this action. And you go, well, I'm a big fucking deal. Well, that's bigger than you think, right? That's 154 pips, right? Nothing wrong with that. That's pretty solid. So if we're going to come up here, well, we're already into the oversold condition. I'd rather see that get a little higher. If we're, it doesn't matter which one we use; they've all broken, right? So we're through the golden zone here. So coming up into this range here, I want to be looking and preparing for the opportunity to potentially get this short to come back down to the lower end of the range. So the MFI is already there. It's already there. Now I'm using a 21 period to accommodate. I think the default typically on a Stoch is going to be 14. I went to a 21 to try and get to accommodate the range a bit better. 14 was a little too choppy. But as we continue up here now, we've flatlined here as we've gone as far as we can go here on the range here. So there's 100%. So now we just go sideways. But as this starts to come back down around, if you start to get some red forming in the candles here, you've got a potential setup for that trade. There's no, you don't get a measured move here to work with because we're through it, right? You're at the 786. So what you'd actually prefer here, if you're trying to set up this trade, is for this to go, God damn it, to go a little bit higher. You'd rather have that go a little bit higher. So something up in this range here, because we can just use the history here. Say, well, if it gets up here, that's where sellers seem to come in. We find supply coming back down. So that's got a bit of a move to get there. So we still got another 50 pips. Or shit, I could do that today. So you got another 50 pips to go to get up there. You could certainly use this range here this could be your stop. So you've got that little range there. If you got up here and had the opportunity to sell and all of this cooperated, and then you got one or two red bars coming in, I wouldn't take it on the first one. A lot of people tell you wait for the third bar and then you could take that, particularly on a 3-hour chart. You wait for the third bar here, you left half the move on the table. So so I'm on a 3-hour, you might go down to a 1 hour. Well, let's do it. You might go down to a 1 hour and say, all right, if I get three candles that are red coming down on this, then I might start looking for that short side because I can be pretty tight on the stop. So ideally it would come up to this range. So then you'd be looking at, what did I say here? So you'd have, call it 55 pips on your stop. Not terrible. Now notice here we get a little more squirrely. Oh, that shit, I forget that thing sticks. You get a little squirrely here when you get to lower time frames with any kind of stochastic. Right? So you got to be conscious of that. So even though I might be looking here for a little something, well, here's two red bars, right? It's not enough, right? So, but the stochastic MFI is rising, so that's not a sell signal. Not to mention, look where you are on the range. We want to get this up higher. So the other thing you might do, let's go back to a 3-hour so we can look at that. The other thing you could do here is just put a regression channel on it. Now it's going to be mighty tight. Then go back to a 0. Okay, so now we're well contained in this range. If I push up into this, so you could just put an alert, right? Just add an alert up here. We get up to that range, just let me know. All right, when I get up here, I want a heads up. If this is extended as far as I would like to see it, right? So here we're already at 100%, but I get up to that range, and I come out of this regression channel, and I get a couple of red bars, you'd be trading that for that to make it all the way back down here. Well, okay, well, what kind of profit potential would we have? Right, there's 250 pips. So it's not a long-term position trade. Now, fuck, that thing's annoying. You got to remember to take it off your mouse. All right, but so from this, right, we're just straight up, right? Just New Zealand from that low is gone straight up. Now they're intersecting here. Now they're intersecting. So a little bit further, another 50 pips here. I think you could ride that down for the potential 250 on the ride down with a 50 tip stop. Well, so a decent risk reward. Well, let's do it. Sitting here, that's your target, low end of the range. 4.7 to 1. It's not bad. Not bad. Now, if you some people don't like the Fibonacci, right? So if you had a little pullback, you don't have enough here to even use a trend line, right? If you got a little bit of a pullback, something like that, then you could at least put a trend line on it. Get you something like that to work with, so then the break of the trend line, you could take that for the ride down. That's what I see here. It's because of all this. Right, high risk to be putting on a new trade, or even if you're sitting in a trade right now, knowing this is a lot of market moving potential here, certainly in the euro, right, and anything in Europe. All right, the pound, of course, as well, right? So you've got the yen right here, monetary policy statement that will be significant. Powell speaks again on Thursday, so heads up here. These are market moving, but over here we're all clear. Get this up into this zone. You take the trade, put a stop on it, and let it rip. Okay, guys, there you go. We'll be back to, let's see, what's today? Tuesday? Okay, yeah, crypto tomorrow. Okay, guys, talk to you later.